aids management. It provides various customized data which helps in planning, organizing, controlling the activities at various levels and time periods. It provides accurate information and at the right time to the management. Next point is cause and effect analysis. The most distinguished feature of management accounting is that it portrays cause and effective relation between the variables. So the variables have a different type of ideology, but they try to find out effective relations between all the variables, and if the firm had earned profit, then it display the reasons for the same, and if it is incurred a loss, then it gives a reason as well. The another point is helps in achieving objectives. The ultimate aim of any business concern is to earn profit. All other plans and strategy prepared and directed towards earning a handsome and reasonable profit. It aids management so that managers can take effective decisions which are directed towards the achievement of certain objectives. We will move for the next point, that is scope of management accounting. The scope of management accounting is very wide and broad in its scope. It embraces a variety of aspects of business operations. The ultimate objective of management accounting is to aid management in effective functioning of planning, organizing and controlling. Now let's move for the first scope is financial accounting. It is a general accounting practice which includes a recording of a transaction taken place in the business, posting it into respective ledger account, balancing them and preparing a trial balance. On the basis of the trial balance, the entry is made in trading profit and loss and balance it. So the financial accounting is a basic requirement for management accounting. So the scope is wide, and to get an information from the financial accounting, it's a prime object or a prime requirement. Next is cost accounting. Cost accounting is one of the branches of accounting. Cost accounting is basically a process of a technique to ascertain cost. It provides a valuable data for planning, organizing and controlling the business operations through various tools like standard costing, marginal costing, budgetary control or many more. So ultimately the cost accounting is helpful for management accounting in case of planning and organizing to understand a various part of their requirements. Next is budgeting and forecasting. Budgetary control is an instrument used for planning and controlling the operations of the business enterprise. So if the company willing to understand the planning and controlling, they need to understand the budgetary control first. The activity basically calls the required actual performance with the amount of a different type of correcting deviations. So the informations are varied. Information gathering, it's systematic, but how the budgets can be forecast and control the whole system, that would be important factor. Here the next point is statistics. Management accounting, in order to operate more effectively, also calls for certain statistical tools such as time series, regression, sampling, correlation, which are highly useful for planning and forecasting. So the statistical tools is also very much important scope. Inventory control. Management accounting also embraces inventory control as it involves major portion of the total cost. Why? Because of the raw materials are actually a biggest part of a cost or a major contribution in the total cost. The management should determine accurate levels of different stockpiles such as minimum stock level, maximum stock level, reordering level and other part of stock control. Next is analysis and interpretation of data. Analyzing the financial data is very important and interpreting them in such a way that equally part of required information is concerned, because of the financial accounting provides a valuable data which can be used for comprehensive study over the years so as to analyze the situation of the company. Next is reporting. Once the data has been analyzed and interpreted, the next task before the management is to communicate those valuable data to the interested parties both inside and outside the organization. For that, the management needs to prepare various reports which make the data presentable in a proper form than the numerical form. Another is methods and procedures. Management accounting also holds in its arms maintenance of a proper data processing and other office management services, reporting to use mechanical and electronic information. So this is all about a scope of management accounting. Now move for the next important topic is difference between management accounting and financial accounting. Fine. Here the financial accounting, as we already discussed, it's a base of accounting branch, and management accounting is an advanced level of accounting branch. Management accounting is always depends on financial accounting because of without information management cannot take any decision. But financial accounting is a basic of accounting or a basic part of accounting system, that all the informations are actually gathered, start analyzing, and then financial statement has been displayed. So here the financial and management accounting are closely interrelated to a large extent. It's just a mere extension of financial accounting. Let's begin with the first point, objective. The main aim behind the practical financial accounting is to supply data, information in the form of profit and loss account and balance it to the external parties. Management accounting, on the other hand, is mainly responsible for the data external management team so as to effectively work. Next point is performance. It displays the financial position of the firm at a particular date. In case of management accounting, it provides the data of all relative departments and their function performed in the business. So the financial positions of the firm in financial accounting, it works on the basis of their information on the date, where the management accounting will actually try to understood their information to whom it delivered, and then they will actually perform. So the performance would be depends on the informations on management accounting, where the financial accounting is work on the basis of the sequence date. Next is data usage. Financial accounting is historical nature and thus uses past data to record the transaction and thereby display the results. Management accounting, on the other hand, is based on future and therefore supplies for present and future duly analyzed of the financial structure. Next point is monetary management. Under financial accounting, those transactions which are involved monetary effect are taken into consideration. So the financial account basic rules is very clear. If it is monetary transaction, it would be recorded. Here, in case of management accounting, even non-monetary transactions or events are also find their way to enter for the analysis. So that's why in management accounting, financial or non-financial, both the type of events and transactions can be considered into managerial part of decision. Next point is reporting. This goes well as the data is to provide to the outside parties generally, but the management needs a continuous availability of the data and report in order to improve on the current level of conducting a business. Next point is nature. Financial accounting has been said to be more objective than management accounting. Financial accounting is generally counted as a positive science, while management accounting is subjective in nature, as it is highly based on judgment rather than measurement. So in that sense, the financial accounting is generally based on positive science. Positive science means whatever the actual informations or economical informations and the correct accounting informations were always try to record in the books of accounts. Where in the management accounting, it is just find out highly understood on the basis of a requirement for the objective and a goal oriented informations. So these are the different of nature. Legality. With reference to legality of the concept, financial accounting is more or less a mandatory practice for every business unit. So that means each and every part of a business unit, they have to prepare their accounts. Here, in case of a management accounting, in the other hand, is voluntary. That means if the people wanted to do some management accounting concerns, or they wanted to apply some tools and techniques to understand their business and find out their analytical part of the statements, they can apply it. There is no compulsion as to whether or it should be practiced for management. Next is coverage. Financial accounting is broad in nature, covering all aspects of the concern, while management accounting is limited in the case focusing mainly on the needs of the management. It covers those aspects which are important from the managerial perspective of a decision making. So it means financial accounting having a very broad nature, but the management accounting is to be precise. Why it is to be precise? Because of their goals, objectives are designed. Financial accounting's goals, objectives are very much clear. They need to identify their financial status, their financial structure. But the management accounting main objective is to analyze the data and find out the future path of action. Next point is publication and audit. Financial accounts like profit and loss account and balance sheet are to be published for the use of general public. That means they need to identify the stakeholders, maybe general public, maybe the lenders, maybe the bankers, maybe the government, or any other people who are interested to know their accounts. So that means it is always in a public domain and are also subject to audit by a chartered accountant. But in case of a management accounting, there are no such provisions as such for the concern. The next point is methodology. Financial accounting and management accounting also differ in respect of their methodology. In financial accounting, the information is recorded or maintained in the form of various accounts and statements, while in case of management accounting, costs and revenues are mostly reported by various responsibility centers. So in that sense, the amount of concern for both the requirement system, in one that financial accounting is based on recorded informations, where the management accounting is based on cost and revenue object. Next topic is difference between management accounting and cost accounting. Here let's start with the first point is objective. The purpose of a management accounting is to provide information to the management for planning, coordinating and activities of the business. where the cost accounting objective is the part of recording the cost of producing a product or providing a services. The cost is recorded product wise or unit wise. Second point, scope. The scope of management accounting is very wide. It includes a financial accounting, cost accounting, budgeting, tax planning, and many more to understand the financial information as well as financial data. While cost accounting deals primarily with cost ascertainment. Next point is nature. Management accounting is generally concerned with all the projection of figures for future. Because of the management accounting comes into the picture only after financial accounting and cost accounting. So they will actually try to project the amount of figures for future understanding. While cost accounting uses both past and present figures to analyze the costing system. Next point is data used. Management accounting uses both quantitative and qualitative information. As if you understand, earlier I was mentioned that they were actually trying to identify financial and non-financial transactions. The same way here, the qualitative and quantitative transactions are required to analyze the system. While cost accounting is only quantitative aspects are used in cost accounting. Next point is development. The management accounting has been developed only in the last 30 years. In cost accounting, the development of cost accounting is related to industrial revolution. It is able to provide information not only about cost structure but also for planning and decision making. Next point is principle followed. No specific rules and procedures are followed in reporting of management accounting because of it is a purely technique. So as such, there are no specific formats, statements, anything else. So here the rules are not required. The reporting is very simple, and according to the understand, you can go for a reporting. While certain principles and procedures are followed for recording cost of different products, the same rules are also applicable at different times too. So this is all about differences between the management accounting and cost accounting. Now we move for the next topic is functions of management accounting. The functions of management accounting is very much important because how to move and how to work management accounting in the organization. The basic functions of managers are planning, organizing, directing, controlling, and many more. Let's begin with the first, provides data. It serves as an important source of data for the planning of management. The accounting informations and documents are repository of a vast quantity of data about the past progress of the enterprise, which are a must for making forecast for the business. So provide data is very important. Then the modified data. In order to facilitate managerial decision making and making it more effective and accurate, accounting data must have to be properly compiled and classified. That means if it is not compiled and classified, it would not be important or it may not be affected also. Thus, modification of data is an important function as it processes the data so as to derive some meaningful conclusion. So if we want to reach a systematic conclusion or reasonable conclusion, the data should be properly analyzed. Next point is analysis and interpreted data. The data obtained from the accounting area is analyzed meaningfully for effective planning and decision making. For this purpose, the data so collected is offered in a comparative form. Ratios are also calculated and likely trends are projected as well. So this particular data comparative analysis and ratio would be helpful to understand a managerial system. Next is serves as a means of communicating. The management accounting practices provides means for communicating management plans upward, downward, outward through the organization. It means if you want to communicate these informations and these practices, you need to analyze in all the direction with all the sides. It is an initial stage. It helps in identifying the visibility or feasibility of various segments of plans. It helps all parties to inform about the plans that have been agreed upon and their roles in the given plans. Next is facilitates control. Management accounting assists in transforming given objective and tactics into specified goals for attainment by a specified time and source effective accomplishment of these goals in an efficient manner. So it means it can be facilitated only when you identified your goals